It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Dialing back Fed wagers, the latest U.S. jobs and consumer data offers support to investors speculating the Fed is nearing the end of its tightening campaign. Meanwhile, a string of inflation reports from around Europe this morning will help the ECB judge whether to keep raising rates. A bellwether German state posts a surprise CPI jump in August, while Spanish inflation quickened again. And Hurricane Idalia rapidly intensifies into a dangerous Category 4 storm as it heads towards landfall on Florida's west coast. We're on the ground with the latest. Welcome to Bloomberg Surveillance. You're watching the early edition. I'm Dani Berger in London alongside Simone Foxman in New York. So, Simone, the day after a jolt's jolt, the question will remain, is this a turning point or is it just really sensitive summertime light volume markets?
Yeah, and frankly, everyone's confused. UBS's Jason Draho calls this the Marketheimer effect, building on that Barbie Oppenheimer thing. The two incongruous events, essentially conflicting data, conflicting interpretations of exactly what's happening with the U.S. consumer, where we go with Fed policy. So we got this sort of negative news yesterday. We saw S&P future, we saw stocks rally, we saw bonds rally, but today we're reversing some of that trend. We're back at around 4,500 for the S&P futures, or two-year yields slightly higher, but not at that level that we saw, that 5+ level we were talking about just a few days ago. And the question really here, have we hit the peak in yields? Are we off that 5+% for good at this point? We're closely watching the yen here, the dollar strengthening. It's very, very close to a record against the yen that we haven't seen since late last year. Also watching oil. A couple things going on here today. A seeming coup in Gabon, soldiers overtaking the country's government just days after a disputed election. We're also, of course, watching the impact of Hurricane Idalia on some of those energy assets in the southeast, Dani.
Simone, I got some breaking lines to bring us more European data hitting the tape. This one for Euro area, August economic confidence coming in just ever so slightly weaker than expected, 93.3. The estimate was for 93.5. We also have had the final reading for August consumer confidence come in bang in line with what we saw in the preliminary reading. That is a -16. I should also note we just had industrial confidence come out for the Euro area too. That is significantly weaker than expected. Not surprising, considering what PMIs did earlier this month. But it's notable that Europe has a problem not just with industrials, but with services too. Both fell into contractionary territory. We're going to be talking about all that data with Maria Tadeo shortly, because we've got a whole lot more coming this week for the Euro area. Now, the reaction in terms of the bond market was all based on around 6:30 a.m. this morning, London time. We had North Rhine-Westphalia. I always mess that one up, but it's a big region in Germany. I apologize to all of our German viewers for me butchering that. But we did see inflation really quicken up here for that region. That was the immediate reaction we saw in the German two-year yield, and it's mostly held on to that, about 5 basis points higher. European stocks perhaps trading some of that stagflationary fear. We are looking for the first down month for European equities for the first in 3. And the euro, look, perhaps it's troubling that you have a story where yields are higher, yet the euro is weaker. It's weaker by a 1/10% versus the dollar. So, Simone, the euro at the moment really trading more so on the growth story than it is the rate story, than it is the yield story. The ECB, it is priced into hike where the Fed is not, Simone.
Yeah, that's right. And I mean, we have this higher than anticipated inflation in Germany and the like, and then also the flagging consumer confidence there. And it is a big week for European data as the ECB gets its first glimpse of key data ahead of that September meeting. Spanish inflation, again, rising to a 3-month high. Regional data trickling in from Germany, also indicating an unexpected rise in prices. Here to break this down with us, Bloomberg's Europe correspondent Maria Tadeo. She joins us from Brussels. Okay, Maria, a whole string of European data this morning. What does it tell us about the inflation story first?
Yes, and look, we know now every data point matters, so we need to look at every data point that we get out of the euro area. And look, we have two so far. One is obviously coming from Spain, which sees inflation in line with expectations, I should note, at 2.4%. But nonetheless, when you compare it to the previous month, and that matters in terms of the trajectory, over time, you did see an uptick from 2.1 to 2.4%. The core inflation number in Spain, it was stable. But again, remember, what the European Central Bank wants to see, particularly, especially when it comes to core inflation, is a sustained deceleration, declines that shows or really proves the monetary policy is now really fitting into the economy. Now, when you look at Germany, we started on that note from North Rhine-Westphalia. It is a hard name to pronounce, Dani, so we've got to cut you some slack on that front. But, we should also be kind at times. But look, it started on this upward surprise on both the monthly but also the annual reading. We've seen a couple of other regions trickle in anticipation of the German CPI data, which show maybe the number. There were risks of an upside surprise to the CPI. Maybe that comes in more balanced. Overall, of course, we're still waiting for this German CPI, which economists, before that North Rhine-Westphalia hit came out, expected would show a decline, so a cooling down in Germany. Now, you have to put all of this together with the rest of countries that we're expecting are set to report their numbers for August, and obviously the euro area number, which should put this now on a bigger context for the European Central Bank. But again, this matters because this is really the final data point, especially when it comes to inflation, that the European Central Bank will get before they make their deliberation in September about that rate decision that is coming up.
Maria, may I first say you are way too kind to me. My problem is that it has both north and west in it, and I just keep wanting to say northwest, but it's not that. It's North Rhine-Westphalia. It is hard. Thank you, Maria. Again, you're too kind. Look, okay, in 2 weeks' time, you're going to get on a plane. You're going to head to Frankfurt for the ECB decision. What does this change for it? Does it change anything for them at this point? Do we move in either direction?
Look, in terms of the European Central Bank, and you're very right to highlight this, because there is now an open debate that was introduced by the central bank itself. It went from being almost an autopilot to hike, we need to hike, to now let's take a reassessment, go back to being very data dependent and look at every data point to potentially now introduce a hike, but also a hold. So that is the state of the debate. Dani, in terms of the data that we get now, the question for the ECB at this point is not whether inflation is cooling down. We know that it is cooling down, especially, Dani, if you compare it to a year ago, if you look at the records, at the near records that we were seeing across the euro area, it is obvious that the monetary policies feed into the economy. But the real question, and this decision will hinge entirely on this question, is whether or not there are signs that inflation is cooling down sustainably back to target that merits a pause. That is the whole core of the argument. I think overall, if you do get data across the region that shows it's either stable or actually there's an uptick, you could argue there's a case for a September hike.
Maria, thank you for breaking that down with us. Bloomberg's Maria Tadeo out of Brussels. Now, Hurricane Idalia is building strength in the Gulf of Mexico, heading towards landfall on Florida's west coast, where it threatens to unleash floods and trigger blackouts. President Biden spoke about the government response yesterday.
We're worried about the surge, the ocean surge. We don't know exactly yet. It's hour to hour we're watching this, but I told the governor that, and the mayor, and the regions that are likely to be hit first, that we're there as long as it takes. We're going to make sure they have everything they need.
ABC News reporter Em Nguyen joins us now from Tampa, Florida. Em, what do we know about where exactly the storm is expected to make landfall and when, and just exactly what the impact could be?
Right. So a few things to break down here, Dani and Simone. Right now, we understand here, at least in Tampa, the winds are starting to pick up at about 50 miles per hour. Overnight, there was heavy rain in the area. The hurricane of this strength has never made landfall in the northwestern part of Florida. And there's even a tornado watch in effect for the state until 6 a.m. This, of course, as Hurricane Idalia barrels towards Florida's Gulf Coast, expected to make landfall just north of Cedar Key, that's just south of Tallahassee. And the hurricane strengthened over the Gulf of Mexico, threatening to unleash catastrophic storm surges and rainfall. Now, Fort Myers Beach, just south of here, is already flooded. It's the same community devastated by Hurricane Ian last September. And Governor Ron DeSantis warned people in these areas, announcing that more than 20 shelters are open and more than 1 million gallons gallons of gas are available if needed. Overnight, people in at least 30 Florida counties were placed under evacuation orders. Residents actually chose, some of them, to hunker down. They boarded up their windows and filled those sandbags. They got water at the grocery stores. Now, Tampa Electric actually secured tens of thousands of workers from more than 20 states as far as Maine to help restore power after the storm. 5,500 National Guardsmen are also on high alert. And as President Biden will be receiving a briefing on Idalia today, FEMA is already calling on Congress to approve more funding for disaster response. Of course, we're also looking very closely at those storm surges, which could be life-threatening. They could go up to 16 feet in some areas, and it adds to the increasing flood threat here and along the coastline. Dani, Simone?
We just moments ago, 10 minutes ago to be exact, we had this upgraded from a Cat 3 to a Cat 4 storm. What difference does that make in terms of impact when it makes landfall to now have this be a worsening type of environment?
Exactly. So a Category 4 storm, and when it's actually compared to a Category 3 storm, that means higher winds. It could be potentially devastating for the coastline of Florida. This means downed power lines. It could be intense flooding in some parts.
All right, I think we might have just lost Em's feed there. We really appreciate her coming on for us. I hope she stays safe there as she reports in Tampa, Florida. That's ABC News reporter Em Nguyen. Thank you so much. Now, we're also watching Treasuries this morning after bigger than expected declines in job creation and consumer confidence prompted traders to sharply dial back bets on a September hike. Let's get over to Bloomberg senior markets editor Phil Serafino on this. Phil, it was remarkable to look at the market reaction. The dollar immediately crumbled, stocks shoot higher, yields we get this rally in bonds too. How much of that can we chalk up to summer markets versus this actually being a change, a corner turned in a weakening labor market?
Well, it does feel like sentiment really has shifted in the bond market and also in the stock market just in the past few days. You know, you go back a little more than a week and a half ago, Treasury yields were at a 16-year high. The market was very preoccupied with the fact that there was a big flood of Treasury issuance coming. The Fed was going to keep rates higher for longer. And that has all sort of turned around a little bit. And that report yesterday on JOLTS really helped. But you go back to Jerome Powell's speech on Friday. There were no surprises from him. He says, hey, we're going to be watching the data to decide what to do. And the market sort of took that in stride. And now investors are sort of looking at the glass as being half full. You know, Treasury yields have come down from, you know, those 16-year highs of just 10 days ago, and now they've pulled back considerably. So it feels like investors really are sort of taking the benign view that the soft landing is coming.
We saw several rallies last year on the expectation that the Fed would pivot, go to a pause, or even potentially cut rates at some point in the future, signal its willingness to do so. Do we think this one is going to last this time?
Yeah, it really does depend on the data because Powell and other Fed speakers have made clear if they see signs that inflation and inflation expectations are not coming down, they won't hesitate. It feels like the market is pricing in a pause at the September meeting. Beyond that, again, and you know, we'll get the jobs report on Friday. It really does matter what the data shows, but the market is setting up, both stocks and bonds are setting up for a very benign environment where the Fed goes onto a pause and inflation cools down. So all eyes on the jobs report and any inflation data that comes out over the next couple weeks.
Yep, Jerome Powell at pains to say that they are data dependent, so we must be too. Phil, thank you very much. Bloomberg's Phil Serafino. All right, we're going to be discussing China's economic slowdown coming up on the program. We're going to be speaking with Hao Hong, Chief Economist at Grow Investment Group. He's known for his outspoken views on China's financial markets and the economy. A conversation you don't want to miss up. But first, coming up, we're also going to be speaking with another expert. It is Josie Anderson of the Center for Economics and Business Research. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Simone Foxman is in New York. Now we have A big earnings result tomorrow. It's UBS and investors are bracing for a record quarter as a Swiss lender prepares to unveil the first quarterly results since taking over Credit Suisse. Joining us now is Bloomberg finance editor Tom Metcalf. Tom, I'm going to be completely honest. I thought it already happened. I mean, we literally already know so much. When I came in this week and looked at the calendar, I was like, that's interesting. I mean, is there anything new that we might learn this time around that they haven't already told us?
Well, there's certainly be a lot of detail out there which we're really looking forward to getting, and I think it's a fair point to think it might have already happened because these results have obviously been delayed.
That's
right?
Kind of you, Tom.
So no, this is as late as I can remember a Q2 for a European bank, so going right up to the end of August, obviously. But no, I mean, there's been a steady drip feed of sort of what are the plans are. I think for me, the interesting thing is what gets confirmed at this set of results. So obviously, we've been reporting that, it's likely the Swiss unit of Credit Suisse will probably be absorbed fully into UBS, expecting that maybe to get announced. But also then, on the job cuts that we know about, what they might be doing with the investment bank. Just be really interesting to hear what the executives are saying now they've sort of been able to run the rule over most of Credit Suisse.
Well, UBS decided to voluntarily give up sort of a safety net from the Swiss government. How does that play into the results we're going to hear?
Well, I think that's really interesting in that basically, our understanding is that gives them a lot more freedom, that gives them a lot more ability to effectively, make those tough decisions, perhaps more job cuts than the Swiss government would have been sort of comfortable with. And of course, the discussion around the Swiss bank, it's very much now a sort of, seen as a private market transaction, and that given up of the backstop has very much helped kind of any political sort of backlash that, was definitely resonating after March.
I've got kind of a technical question for you, because this is obviously going to be the first set of results where they're consolidated, that it's UBS with Credit Suisse in it. What will that actually look like? How do they present Credit Suisse's results within the bigger picture?
Yeah, as a former accountant, it sort of fills me with terror how they're going to.
Yeah. Tom,
so this would be a very
painful.
Yeah, I know. But this would be a very painful task to put together two banks. But no, I think actually in terms of what the results that will be released will actually be fairly top level, fairly high line. So it might just be as simple as, a single section on Credit Suisse and perhaps a very few line items. So, what revenue is, what the assets are, all very key to investors, but I'm not sure it will necessarily be that easy, even as you drill down into the results, to see sort of effectively Credit Suisse as a single entity anymore.
It's such a great view into your mind, Tom, to hear what keeps you up at night. Consolidated earnings results. Tom, thank you so much for all of that. That is our finance reporter, Tom Metcalf. And we're going to be covering UBS for you tomorrow. Francine Lockwell will be speaking with the CEO, Sergio Armati, on Bloomberg TV tomorrow. That will be 2 a.m. Eastern Time, 7 a.m. in London. Coming up on this show, the crypto industry gets a landmark U.S. legal win in its push to launch a spot Bitcoin ETF. That's next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Simone Foxman is in New York. Grayscale won a key legal battle in its push to launch a spot Bitcoin ETF. The ruling brings the U.S. crypto industry just one step closer to tapping billions of dollars from everyday investors. Bloomberg's Kaylee Lyons has the details.
Grayscale has moved closer to launching a spot-based Bitcoin ETF in the U.S. in what is potentially a watershed moment for the crypto industry. A D.C. Circuit Court handing them a victory when a 3-judge appellate panel overturned a decision by the SEC to block the ETF. They said in the ruling, this is a quote, "The denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. In the absence of a coherent explanation, this unlike regulatory treatment of products is unlawful." Basically, they're poking a hole in the SEC's argument that a futures Bitcoin ETF, which already has been approved in the U.S., should be treated differently than a spot-based product. That is something the SEC has said because of fraud and manipulation, and yet it doesn't seem that this court is buying that argument. Now, this is not to say that GBTC, the Grayscale Bitcoin Trust, is going to convert into a spot ETF tomorrow, but it is still a big moment in that direction. This now goes back to the SEC, and they do have some recourse here. The SEC, through a spokesperson, said in a statement to Bloomberg, "We are reviewing the court's decision to determine next steps," and they still could fight this. They could ask the full D.C. Circuit Court for a review. They have to do that within the next 45 days, though our litigation analyst here at Bloomberg Intelligence, Elliot Stein, has said he doesn't think that would yield any kind of different result. There is also the ongoing question about what this means for other spot Bitcoin ETF applications that have been filed. None have ever been approved in the U.S. to this point, but we have seen a wave of them recently from the likes of BlackRock, WisdomTree, Valkyrie, and others. And it's a question how this ruling in the D.C. Circuit Court on Tuesday makes a difference ultimately in the spot ETF race here in the U.S. In New York, Kaylee Lines, Bloomberg News.
Don't miss our interview coming up later today on Bloomberg Markets with the CEO of Grayscale. That's at 10:45 a.m. Eastern Time. Now, Simone, the other regulatory-related story we're looking at in the U.S., you flagged this to me yesterday, that Medicare list of companies that can now negotiate on some of their pharma products.
Yeah, this is a very controversial plan from the Biden administration. And yesterday, they identified 10 drugs that they intend to negotiate on in terms of pricing for Medicare. But spin this story forward. Today, there's a great story out on the terminal about whether or not a GLP-1 drug, Ozempic, created by Novo Nordisk, could be next. This is a diabetes drug. This is the diabetes version of the drug, but heavily associated with weight loss and costs about $1,000 a month. So enormous costs, potential savings as well for Medicare.
My favorite thing about this New York Times story, Ozempic is so massive for the Danish economy that it means less rate hikes. Wild stuff.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Dialing back Fed wagers, the latest U.S. jobs and consumer data offer support to investors speculating the Fed is nearing the end of its tightening campaign. Meanwhile, a string of inflation reports from around Europe this morning will help the ECB judge whether to keep raising rates. A bellwether German state posts a surprise CPI jump in August, while Spanish inflation quickened again. And Hurricane Idalia rapidly intensifies into a dangerous Category 4 storm as it heads towards landfall on Florida's west coast. We're tracking the very latest. I'm Simone Foxman in New York with Dani Berger in London. Dani, so much data, so few people in the office, and so much room for volatility, it seems.
I know there's like 10 people trading this market right now. I mean, it makes for an interesting story for us to go through, if anything. I mean, the reaction yesterday was really stark. Dollar folds, bonds jump, stocks jump. How much of that is sustainable on light summer trading? In Europe, we're reacting to the North Rhine-Westphalia data out of Germany. Finally got that one. 6:30 a.m. is when it hits the tape. It's usually one that we do end up trading off. It's seen as a bellwether for the entirety of German CPI. We're going to be getting that in the week, so that is not a data point for us today. But in the meantime, yields heading higher by 5.5 basis points for the front end of the German curve. European stocks, those fall, headed for a monthly decline, the first in 3. And the euro, in just the past few moments, it flipped to strengthening versus the dollar. We're flirting with 109 on euro dollar. The initial reaction was to weaken, which was concerning. Perhaps the market more concerned about the economic story than the inflation story. Are we seeing the opposite of that now, or are we just seeing confusion in summer markets, Simone?
Yeah, and confusion reigns in the United States as well. You mentioned that strong risk-on reaction in stocks yesterday after some of that disappointing data. We're seeing a little bit of a reversal there, down about 1/5 of 1%, but yields retracing some of their decline yesterday, seeing yields rise now 491 on the 2-year. Is that the highest we go, though? Have we seen the highest we go in the 2-year yield? It was over 5% earlier this week. We are tracking that closely. Also tracking the U.S. dollar yen. This is a number close, 146.30, close to a record high for the U.S. dollar against the yen since late last year. Where do we go with that, considering some of the weakening data we're seeing out of China? And of course, we're always tracking Brent crude very closely, 85.90. Some of this on a coup going on in Gabon. Of course, that's an OPEC member, very small OPEC member, just 200,000 barrels per day. But another coup in Africa, as well as the impact of Hurricane Idalia on the southeast. Dani.
Well, Simone, as we've been talking about today, I mean, it's a really big week for data, a big week for European data, too. The ECB is going to get its glimpse of key data ahead of that September meeting for the first time. We've already had inflation out of Spain that rose to a 3-month high. Regional data that's also been trickling in from Germany, indicating an unexpected rise in some places, not so much in others. Look, it's complicated. And to try to assess that, with us is Josie Anderson, managing economist at the Center for Economics and Business Research. Josie, perhaps hard to get like an exact read based on the data we've had so far today. Tomorrow we'll get more. Where do your expectations lay?
I think tomorrow we are still expecting a deceleration in inflation across the Eurozone to around 5.1%. But the thing is that masks a lot of variation across the member states. And I think we're reaching an interesting point, actually, because we've had a large base effect for several months now, resulting from the fact that there was this huge energy price spike last year. And so we've been seeing deflation in that energy metric for several months now, which has been having a big impact on the overall headline rate. But actually in some countries, for instance, Spain, where we have data, it has started to see an acceleration in inflation. But now that's quite a low rate in Spain, with the latest data coming in around just above 2%. So it's back towards target, but starting to rise again. And I think that's interesting because we might see that base effect from energy prices, which spiked last year, start to drop out. Food price inflation is still high, but it's decelerating. So that's another dampening factor. But these are quite volatile factors. So after they come down, we're left with core inflation, which is also expected to decelerate tomorrow. But interestingly, in the latest data, services inflation, which is also watched very closely, did accelerate. So I think a big question tomorrow is, are we going to see services inflation accelerate again? And if it does, that might leave concerns about longer protracted inflation above target.
What in the world does the ECB do with that? That is so fragmented and so many divergences depending on where you look.
Yeah, exactly, because some member states still have very high rates of inflation, in particular Slovakia, where it takes a while for high energy prices to pass on to consumers. That's still seeing above 10% inflation. So it's got to balance that with somewhere like Spain, which is seeing lower inflation. So I think there is still a possibility of a hike in the September meeting. It does depend a lot on the data tomorrow and what else we see come out before that meeting. After that, I think it's likely that they'll stop hiking. Because, yes, now we're seeing inflation come down in lots of countries and fears about the wider economic impacts of high interest rates for a sustained period and what that will do to economic growth.
Yeah, and you can see from the swaps market's roughly divided on exactly what's going to happen in that September 14th meeting for the ECB. I want to take you across the pond, though, because we heard, again, the message from Jay Powell, data dependent, data dependent, data dependent. When are they not data dependent? But take me through your expectations, both for September and then beyond. Are we going to see that pause here next meeting? I believe that is what markets are expecting in the U.S.
Yeah, exactly. So markets are very much now expecting no hike in September, with that jobs data coming in recently quite soft. And we'll get the non-farm payrolls data on Friday, and we'll see how that affects things. I think in September, we are very likely to see a pause, no hike. After that, I think there is still a possibility of a hike. Later today, we're getting the confirmed second estimates of GDP growth in Q2, which came through quite strong. The latest retail sales figures, for instance, were up 0.7% in July, which is quite strong. And we're still forecasting 1.5% GDP growth in the US this year, down slightly from 2.1% last year, but still relatively strong. So I think if the economy continues to show signs of strength, then there is the possibility of another rate hike in order to get that inflation low and staying low.
Yeah, so if we get that rate hike further down the pike, push it off past September, does that increase or decrease the prospects of a soft landing versus a hard landing?
I think we're seeing more and more signals of a soft landing with these figures coming through fairly strong, like the GDP growth I just mentioned, and the fact that inflation is now slowing back towards the target that the Fed want. But the question is, and Powell is definitely signaling that rates are going to stay high for longer. Over the slightly longer term, will that lead to more impacts on businesses which can't borrow, consumers which can borrow less? Will that lead to more impacts down the line, particularly if rates stay high throughout 2024? And I think we'll start to wonder when are they going to cut, obviously, which people are starting to debate now already, just because we might start to see, weaker economic growth. But I think for this year, the US economy is really holding up. And as I mentioned, we're still expecting relatively robust growth, which points to a softer landing.
Yeah, I guess for businesses that have been preparing for a recession for so long, I mean, if we continue this possibility of higher rates in the future, how does that change our calculus? Josie Anderson, we'll check in with you to get more on that as this develops. Josie Anderson of the Center for Economics and Business Research. Now, coming up, we turn to China and discuss the economic slowdown with Hao Hong, Chief Economist at Grow Investment Group. That's up next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with the CEO of crypto firm Grayscale. That's at 10:45 a.m. Eastern. This is Bloomberg.
Now, perhaps the biggest economic story we're watching right now in China. And despite a 5.6% decline in the CSI 300 so far this month, we are watching record in monthly inflows into China's largest stock-focused ETF. Now, that's only been trading since 2012, but we're watching about $4.4 billion worth of inflows so far in August. And of course, as you can see, shaping up to be the biggest month on record. So are investors just buying the dip? Joining us now to discuss is Hao Hong, Chief Economist at Grow Investment Group. I should say he's known for his outspoken views on China's financial markets and the economy. Hao, explain this for me. Why are we down 5.6% in this main index, but yet we're seeing investors pile in?
Yeah, well, I think people are in general disappointed by, the pace of policy announcements that is coming out from the top, right? So, every one of us is waiting for a huge, big bang announcement, some sort of bazooka policy to, to ease monetary and also fiscal expansion as well. But we're not getting that. Instead, we're getting piecemeal policy bit by bit. So I think as a result, the market is likely to be disappointed. But then at the same time, because the sell-off has been so severe that now the Chinese market has declined to one of its lowest valuation on record. I think that is the reason why I think that lower valuation is attracting foreign investors to come into this part of the world.
So we've seen some of these support measures happen, but of course not that big bazooka that investors, I believe yourself included, were looking for. I mean, is that still in the cards, or are we just going to have to make do with these piecemeal measures from now on?
It remains to be seen, to be honest. Because normally when they cut stamp duty, it's a very strong policy signal coming from the top. Basically saying that they really want to shore up the confidence and also shore up the market and the economy. So normally it is a sort of a pre-announcement of what is to come in the coming months. So I think many of us are still remaining hopeful. And also last night, as you can see, they announced a cut on existing mortgage, to make it easier for people who has already borrowed to buy homes to buy even more homes. And also, today in Guangzhou, they're easing the lending standard once again. And Guangzhou is a key tier 1 cities in China. So I think, there are many things going on. I think what is lacking this time around is that, we don't really have a number to work with. Back in 2008, they announced a 4 trillion yuan stimulus package. Back then the GDP in China is like 40 trillion yuan. So it's like 10% of the GDP in one go in a stimulus package. But this time around, we're not, seeing a concrete number that we can work with.
I mean, that's fair because, especially for those living in Western countries, the kind of traditional Keynesian stimulus that we're used to, it is things like direct transfers to households. I want to read you a quote from Wall Street Journal reporting on Monday and get your take on it, because I found this interesting. They wrote, Xi Jinping has deep-rooted philosophical objections to Western-style consumption-driven growth, people familiar say. Xi sees such growth as wasteful and at odds with his goal of making China a world-leading industrial and technological powerhouse. What does that mean for where we go? If there are ideological objections to things like that Western consumption-driven type growth?
Well, I think, we're hearing the top, wanting to stimulate consumption. Especially this year, exports has been down rather substantially. It's a reflection of weakening foreign demand, and that is part of the economy that we have no control. Right, so even though a weaker currency can help improve the competitiveness of the Chinese exports, but foreign demand for Chinese goods are down this year. So I think in terms of philosophical difference, since we are trying to stimulate consumption, and I think Chinese households at this juncture really need some help. I think handing out consumption coupon or even some cash for the Chinese household is actually one of the better ways, many of us are seeing, but then we're not getting it. So I think we're actually hearing that, the idea is being vetoed by the top. So, no one's really sure what's going on.
How are you still buying bonds, Chinese sovereign bonds? Last time in May we spoke, you said you're buying them. You're right on. The rally continued. Will it continue further?
I think so, because as you can see, the danger for deflation and also the deflationary pressure is still on. And if the Chinese consumption is not catching up, and also Chinese investments continue to trend down because the property sector is still ailing, then I'll be surprised to see long bond yield in China actually making a new low for its entire history. So in this kind of environment, because of the risk aversion and also because of the outlook for deflation, it probably pays to have some bonds in your portfolio.
Well, the latest news, Hao, is that Country Garden will issue $34 million worth of shares as it attempts to dodge default. Can it truly dodge default? And then does this turn into a systemic issue?
Yeah, I don't think it can dodge. I think technically it's already defaulting on many of the payments on its foreign bonds. And I think what's different at this time is that, the defaulting on the US dollar bonds, which is probably not a usual sort of a default pattern. Normally they make it a priority to pay off the US dollar denominated bonds. So I think, even though they're issuing, 34 million US dollars worth of share, it's just piecemeal. It's not nearly enough to cover, 2.4 trillion yuan they have in liabilities. So I think it would be very, very difficult to avoid a default for Evergrande and also for Country Garden as well. But I think, in terms of, a systemic risk, it is slow grinding, right? So many of us are very aware of such risk because, the amount is just so huge. So, waiting, to see what sort of solution can be had from the top.
Interesting. Hao Hong, thank you for joining us. Hao Hong of Grow Investment Group with a reality check for Country Garden and China. Coming up, Hurricane Idalia strengthening as it heads toward landfall this morning. We'll discuss the possible damage and financial loss. That's up next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Simone Foxman in New York with Dani Berger in London. Now, Hurricane Idalia has strengthened into a Category 4 storm heading towards landfall on Florida's west coast. You're looking at live pictures of Tampa now, where you can see winds increasing to 130 miles per hour as part of this storm. Not clear if that's quite that much in Tampa. Brian Sullivan, our Bloomberg weather reporter, joins us now to break down the impact. First off, Brian, tell me here, we're looking at, we've just seen the hurricane strengthen into a Category 4 storm within the last hour. Is the big concern the winds, the storm surge, something else, and where will it land?
It looks like it's a combination of the winds and the surge. With the strengthening, the hurricane strength winds are going to push all the way through Florida right into Georgia. So they're going to last a lot longer than they would have, and they'll do more damage to infrastructure such as power lines as well as houses.
So what will be the cost of that, Brian?
Right now, it looks like it's going to be a $10 billion storm, and that's because it's coming into a fairly sparsely populated part of Florida. A storm like this further to the south or maybe even further to the west would probably cost 10 times that.
Can you compare this to some of the other storms that we've seen come through Florida? Obviously, Florida hit by hurricanes year after year. Is there a specific other storm that this could mirror?
So in terms of its power, it's very close to Hurricane Ian, which struck much further to the south and actually cost $110 billion. That's what happens when it hits a more populated area. But it has the same kind of power that Ian had. It just is not hitting in such a densely populated area. It's also hitting very close to where Hurricane Michael hit, which was actually a Category 5. Again, didn't do as much damage as Ian because it hit that more rural area.
And what happens beyond Florida, Brian? What are we expecting an impact for Georgia, an impact for South Carolina?
So the first thing we're going to see is a lot of power outages. There are about 60,000 people without power in Florida already, and the storm isn't even on shore yet. Those power outages will spread all the way through Georgia, up into South Carolina, probably into North Carolina. We'll see some damage to cotton crops, but it shouldn't be too bad. Fruits and vegetables will probably take a hit as well, but the big commodities like corn and soybeans should be fine, according to Maxar.
Yeah, I mean, talk to me about as well the energy impact. Whenever a hurricane hits the southeast, we worry that it will disrupt production, supply. How are we likely to see this?
So with this one, there hasn't been a big hit on production. It's on the eastern side of the Gulf of Mexico, and most of your offshore production, most of your refinery is done in Texas and Louisiana, which is, safely on the other side of the Gulf. What we will probably see, though, is distribution problems, consumer problems, getting gasoline to gas stations, for instance. I mean, we have seen in the wake of these storms, prices at the pump go up for a short time. So these are all things that could affect the aftermath.
Brian, about a minute here, but what do you make of what we've seen of this hurricane season as a whole so far and where it's likely headed?
It is fairly active. I mean, we've had, I want to say, 10 storms so far this year already. They haven't been big storms. They haven't been truly powerful storms. Idalia here and Franklin, which is also out in the middle of the Atlantic right now, have been the two biggest storms so far. People going into the season were expecting kind of a light season because there's an El Nino in the Pacific, but the warm water across the Atlantic is really going to be driving these storms for the next few weeks, and we haven't even reached the peak of the season yet.
Well, Brian, we hope you will continue to help us parse through this as we head further into hurricane season. Bloomberg's Brian Sullivan, our weather reporter there. Thank you very much. Now that's it for Early Edition. Surveillance coming up ahead as we look at some red on the screen in the equities markets. We're looking at two-year yields trading around 4.9%. That's it for us. This is Bloomberg.